Good day everyone, this is Patrick from EasyFX Code Trading System, and it's Wednesday the 19th of February 2020, and it's just about 8:30 p.m. in Singapore, which is 7:30 Eastern US time, and this is the midweek analysis for spot gold and dollar yen. Let's kick off with spot gold, and from yesterday there was a slight gap up after the uh, commodities market reopened an hour after the usual forex time. This is at 7 a.m. For Singapore, and there was a gap up above the doji and continued all the way to hit the 1600 level, and has continued further today to retest this spike high at the 1611 area, and in fact the high was 1611.31, so just 0.8 pips below the swing high, the spike high, and he has hit that almost to the pip and started to pull back slightly, and this is after it has broken out above this bullish channel, and as well as this intermediate resistance at that time, which is at the weekly R1 pivot. This week's weekly pivot is at 1576.93, and this is it's a major resistance, now support. We could probably mark this now as a support zone. And this is the intermediate resistance, now support as well. And now it has broken through this key resistance level, so we can mark this also as support. But we'll see whether it's able to hold on to provide support over the next couple of days. After hitting retest this swing high, there could be some consolidation, and then could be a dip back down below the 1600 to retest this previous swing high right at the weekly R1 pivot. So we'll see over the next couple of days as the FOMC minutes is released later tonight, as well as US Philly Fed Manufacturing Index tomorrow, and Flash Manufacturing and Services PMI on Friday. Alright, let's take a look at the 4-hour time frame, and you can see the price action after it broke out higher above the weekly R1 at 1592, which was its previous swing high here, and continued higher. This is probably because on Monday there was US holiday, so once they came back online on Tuesday, and with some poor news on and from Apple, warning that they may not be able to, they will not meet their quarterly revenue target, and as well as news coming out from the UK that HSBC is going to cut a lot more jobs than expected. So with that, there was just a run towards a safe haven for spot gold for yesterday, and then a continuation move after breaking out of this upper trend line of the channel to retest the swing high. Okay, so this will be a key support level over the next day to see whether it's going to hold. Meanwhile, usually there's a inverse relationship between spot gold and dollar yen. The dollar yen has also turned bullish and broken out higher today, breaking above this swing high at the 110.30 level and pushing up above the weekly R2 pivot. This week's weekly pivot is at 109.82 and it's turning bullish in the short term after holding support above this triangle trend line and now breaking up higher. Let's move some of these fibs to reflect the latest moves. So we can take this particular move here where it's broken out above this swing high at the 110.29. So this previous intermediate resistance is going to be a key support zone now. This level is now, let's change this to support. Let's remove this for now. So the next key target is going to be at the weekly R3, which is at 110.66. And we'll see how much more it can go. So after that, the next potential target is at 138 fib extension at 111.30. We can also check the reversal move. Reversal move, next potential target is at 138 fib extension at 111.05. So we can likely mark this as a next key target area at 111. But for now, let's watch out for the 110.66 area as the next key target zone. Support is going to be at the 110.29, 20 to 29 area. All right. So US dollar is strengthening, and potentially today the market is going to strengthen as well, as the futures indicate a stronger open today, as the COVID-19 virus, the number of infections has slowed down over the last couple of days, but may still be too early to signal a peak. Right, so a few more news events to watch out from the US over the next few hours, and there's also PPI figure later in less than an hour's time, and the FOMC meeting minutes to look out for. All right, have a good trading week, and cheers.